to know how to save hundreds or even thousands of dollars on your income taxes? I'll show you everything you need to know to prepare for taxes as a self-employed independent contractor so you'll have little stress and you won't owe additional money when it's time to file your taxes. By using the steps I'll outline in this video, I'll ensure that I owe little to nothing for my 2019 taxes, and I'll save myself almost $5,000 on my tax bill. It takes a little preparation, but you can have the same results. Hi, I'm Shayna, and currently I am a self-employed independent contractor, and I do delivery work through GrubHub, and in the past I also provide delivery services through Instacart. And currently I also provide freelance research services on Upwork. And I've been earning extra income through these self-employed independent contractor methods over the past year and a half or so to bring in extra income to be able to pay off my debt and be on a journey toward financial freedom. And so as I've been documenting my process, a lot of people have watched some of my GrubHub videos and they've been asking me, how do I deal with taxes? And so I decided to put together this video, and I consulted with my uncle, who is an accountant, to provide you some information about this. But I am not a tax accountant or a tax professional, and so please do not take the advice that I'm providing as gospel. Please also, I would advise that you actually meet with someone personally and to go over your own individual finances, because everyone's situation is unique. You have to pay federal and state income taxes as a self-employed independent contractor. But if you live in a state that does not have state income taxes, then you don't have to pay them. You'll just have to pay federal income taxes. But in this video, I'm just going to focus on federal income taxes because state income taxes vary so much from state to state. And as a self-employed independent contractor, you're supposed to pay taxes, federal taxes, on your earnings on a quarterly basis. And at the federal level, you're taxed a self-employment rate of 15.3%. So that 15.3% includes 12.4% for Social Security and 2.9% for Medicare. And independent contractors are not required to pay self-employment tax on net earnings of less than $400. So if you made more than $400 for the year, then you do have to pay federal income taxes. But if you made less, then you don't have to worry about it. So to determine or to estimate your tax liability, or in other words, how much you're going to owe in taxes to the feds, there are a few strategies that you can take. So strategy one is, if you were self-employed or a self-employed independent contractor before, you can just look at your previous tax filings to get an idea of how much money you paid in taxes in previous years. And this is a really great strategy if you expect to have the same amount of income that you did in the previous year. And it's also great if you have about the same type of life circumstances. So this will give you a really great idea of what you'll owe this year if everything really remained the same from last year or in previous tax filings. Strategy two is to use a paycheck calculator to determine how much your taxes will be. So by using a paycheck calculator, you can estimate your taxes per paycheck, and you can figure out how much you need to save for each paycheck that you receive. Or you can get an estimate of the taxes that you'll have to pay over the course of a year. So the great thing about a paycheck calculator is that they actually will give you some information on state income taxes as well. So you'll get a greater idea of how much you have to put aside to pay for taxes over the course of a year. Strategy three is to download the free template that I have linked in the description box below. So the free template that I have linked in the description box below is a spreadsheet. And the spreadsheet is really good if you only have self-employed independent contractor earnings for the year. So if you have any other type of income from a W-2 job, then this spreadsheet won't really work for you. And this spreadsheet will give you an estimate of how much you need to save for federal taxes over the course of the year. And I really advise that you check out this spreadsheet and use any of the other additional methods that I mentioned in this video, because you want to use a few different sources so that you can get a really good idea of how much you need to put aside for taxes. So I'm interested to know what brought you to this video. Why are you interested in self-employment taxes? Are you a business owner? Are you a freelancer? Or do you work in the gig economy like I do? Based on the estimated taxes that you calculated, you'll need to save a portion of your paycheck or the income that you bring in into a high interest bearing savings account. So by saving your taxes in a high interest savings account, you'll actually be saving money on the taxes that you'll actually pay over the course of a year, because you'll actually be earning interest. So what I recommend is that once you get your paycheck, or once that income hits your checking account, you do an automatic transfer over into a high yield savings account. And what I do is I use an online bank, one that doesn't have a debit card, and you can choose to use one that does or doesn't have a debit card but has limited access, so that you're not dibbling and dabbling in that money often. So let's say you made $4,000 for the month and you determined that you need to save $1,000 a month on taxes. So over the course of a quarter, so that's every 3 months, because remember I said you have to pay your federal taxes on a quarterly basis, you'd actually earn $60 every quarter just by putting that $1,000 that you save for taxes in a high yield interest savings account. Because right now savings accounts are giving 2.2% interest rate. And so over the course of a year, you would actually save $240 on your taxes just by putting your taxes into a high yield interest savings account. And so you might be wondering, what do I do if my paychecks or the income that I bring in fluctuates a lot? So you can decide that you're going to set aside the same amount of money no matter what. And so you might decide, I'm going to set aside $200 towards taxes every single time, so that way I have enough money saved for my federal income taxes. Or you can decide to save a percentage of the income that you expect to bring in, so that way the taxes that you save, they fluctuate with the amount of money that you're actually bringing in. So for me, I save about 25% of my income, and I set that aside for taxes into a high yield interest account every single month. You've been earning your money and you've been setting aside your taxes into a high yield savings account, and now it is time to pay your taxes. So taxes are due on the 15th day of each quarter, and you're supposed to pay your taxes on this quarterly basis. And if you don't pay your taxes on a quarterly basis, then you'll have to pay all the taxes that you owe by the filing due date. And so typically that filing due date is April of the next year. And you'll also owe a penalty, by the way. So even if you've been paying your taxes on a quarterly basis, you can still be penalized for underpayment if you owe more than $1,000 by the time of filing. So you can actually technically pay all your taxes by January 15th without a penalty if you don't owe more than $1,000 after your taxes. But you can actually save money if you pay your taxes and err on the side of overpayment, and you can actually save yourself $1,000 in taxes, because you won't have to worry about that penalty because you've been taking precautions and paying on a quarterly basis and overpaying slightly. So let's talk about other ways that you can save on your taxes. You can save on your taxes by using deductions. So deductions actually reduce your tax liability. And when we think about deductions, many people just think about like vehicle expenses, especially if you are a rideshare or delivery type of person, because you often think about like the mileage or the wear and tear on your car and how you can deduct that. So let's take a moment to talk about vehicle expenses that you can deduct. So we have standard mileage deductions, and you can also use actual expenses deductions. So the standard mileage deduction, you could choose to use the standard mileage deduction and use the rate that the federal government set and deduct the mileage that you use for business purposes. So you'll actually need to track the miles that you use for business purposes and then use the federal rate of 58 cents for each mile to get how much you'll actually deduct for your taxes. Then, like I said, you can also do actual expenses deductions. So with actual expenses, you can actually deduct things like depreciation or lease costs, gas, insurance, repairs, and car washes. And you'll have to choose between the two. You can't use both. So you'll either need to choose the standard deduction, standard mileage deduction, or the actual expenses deduction, because you can't come up with, you can't mix and mingle them. You can also do other deductions like office supplies or reference materials or other types of travel expenses, advertising and meals or marketing or any other things that might apply to your self-employment as an independent contractor. And so I know like some people who do Uber, for example, they actually will advertise their referral link online. So they could actually use the advertising cost as a deduction for their business. And I actually use the Mile IQ app to track the mileages the miles that I drive through GrubHub. And this year in 2018, I was able to save $4,000 on my taxes just by tracking the miles that I drove for GrubHub. Another way to reduce your tax liability as a self-employed independent contractor is to invest your earnings. So typically as a self-employed independent contractor, you don't typically have the option to invest in an employer-sponsored 401k or 403b. But you do have some options out there called the self-employed pension individual retirement account, also known as a SEP IRA, and you also have the solo 401k. So the limits for a SEP IRA are 25% of the compensation that you bring in as a self-employed independent contractor. And then the limits for a solo 401k are $56,000. And if you invest your pre-tax earnings into one of these investment vehicles, you actually reduce your taxable income. So that means if your gross or pre-tax earnings are $50,000 for the year, for example, and you invest $10,000 into a solo 401k, you only have to pay taxes on $40,000 of income rather than $50,000 of income, which could save you $1,200 in taxes. And it'll also put you in a really great position to retire early or retire at the normal retirement age, but it'll give you a great nest egg. You can also still qualify for a SEP IRA or a solo 401k, even if you have a W-2 job or your employer sponsors a 401k or 403b. So you have plenty of options through investing to reduce your taxable income. I hope this video was informative and it was helpful to you as you go out there and earn income as a self-employed independent contractor. And I hope that you'll be able to keep some of the hard-earned money that you work for in your pocket this year. If this video was helpful to you, I would appreciate it if you gave this video a thumbs up, because it will let other people know that this is a great video, and it will also let me know that you appreciated the video as well. Also, if you found this video to be helpful, please go ahead and share it with other people, because I want to be able to reach more people and to be able to help more people as possible. And if you're interested in learning more about me as a self-employed independent contractor and how I am earning extra income to be able to contribute to my debt freedom journey, please go ahead and subscribe and hit the notification bell so you can be notified when I put out more videos. And I hope to see you in the next video. See you later for now. Bye.